please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The SGX Nifty is indicating that we'll have a start in the green, but not by much, only 46 points. So we'll not go anywhere near yesterday's high. What will be interesting is whether we have a bit of a rally from here, or does this gap up get sold into? Ashwani Gujral is back with us. Sudarshan Sukhani and Mitesh Thakkar also with us. Good morning, gentlemen. Ashwani, so you missed two or three really volatile days in the market. Your sense of how things are shaping up now, and how will you approach this market from here on?
Good morning, Anuj. The problem now is that 4 days of correction and we will start to see buy calls. But if you have seen the monthly chart here, the entire January's gain has been taken out by 8 days in February. Now that's called bearish engulfing, and that's happened way above the 20-day moving average. So given that, it's a blind sell, you can get even a 150 point rally on the Nifty, it'll still be a sell. Because, the 20-day moving average is around 10,800, 850. Oh. So it's quite possible you can get a rally to that point. But the people who buy now, they will get hit even more because they are buying in anticipation of a fresh high. Similarly, on the Bank Nifty, you can rally back to say 26,000, 26,100, but nothing changes because the force of the decline hasn't really ebbed. So while we could spend 2 or 3 days being choppy, going up, going down, I don't think the trend really reverses till the Nifty trades above 10,850 or above 26,200 on the Bank Nifty. So the idea is to look for opportunities of selling. We may remain in that large bar range that we created between 10,300 and 10,600. That's fine, but finally I would think we will go lower.
Okay. Good morning, Sudarshan. What would a positional call be now? Likewise, bearish?
Good morning, Lata. Yes, we have been asking traders to buy put options on every rally, and those small intraday rallies, gap ups, whatever, that view remains. And the markets are likely to chop around after this big decline. After all, there will be a pause at some point of time. But inside this choppiness, if you see a rally of any kind, and I can't define it, but if you see 100 points up, that's a perfect time to go and buy put options. If you see the Nifty rally to 10,800, and there can be sharp, vicious relief rallies, then that's the point again to build your short positions. So I'm not participating in any rallies, at least not now. And the idea is to only be on the short side of the market. The choppiness will end at some point, and the decline has not come to an end. So looking for lower levels, not necessarily now, but soon enough.
Okay, yes, I guess it's too soon to call this an end of the decline, the kind of volatility we've seen in the last few days. But Mitesh is also with us. Mitesh, would you concur with the other two that, perhaps it's still good to go short at some point?
Yeah, that's what we have been advising. Good morning, Sonia. I think very clearly, while we've had a 900 point kind of decline in the last 4 or 5 sessions and then trying to bounce back, see, the bounce back are weakish. Yesterday we got a strong opening but got sold into, and very clearly at the upper end of the bounce back zone, which I suspect should be close at about 10,700, which is when the falling gap on Monday occurred, or possibly even 10,820, which is where the moving averages are congested. I think it will be difficult for the Nifty to sustain beyond these levels. So our advice is very clear. As the Nifty settles down, and kind of tries to consolidate after a big fall, try to sell at the upper end of the range. Eventually, I think we might even break below the lower end of the range, which is 10,300, and head towards 10,100, 150 zone. So overall, try to sell around 10,650 is what I maintain. Add on to position in case the Nifty goes 100 point higher, and keep a stop beyond 10,850 and look for 10,300 as your target sometime during February.
Okay, so the consensus is that you should use the rallies to sell. Could be quite interesting today. Ashwani, in terms of individual stocks, what would be the strategy?
See, some stocks are going up while there's pressure on the others. So Ashok Leyland is moving up strangely. That's a buy with a stop of 128, target of 142. NIT Tech has not gone through a big correction. 4 or 5% in this market is par for the course. And NIT Tech, that's a buy with a stop of 830, target of 860. Bank of India is a sell with a stop of 145, target of 132. Lupin is a sell with a stop of 815, target of 785. And Hexaware is a sell with a stop of 360, target of 345.
Okay, Sudarshan, what about you? What would be on your buy and sell list this morning?
Yeah, apart from the buy and sell list, I had twice in the last few days given a call to buy the US dollar. And the US dollar has been steadily rising against the rupee. In fact, the dollar index has also crossed 90 after a long time. That trade is of course separate from the stocks, but that trade exists. Dips in the US rupee parity should be used to buy and accumulate dollar positions. It's very easy because dollar futures are traded on the NSE. For the stocks, Tata Global is a buying opportunity. That stock has corrected and come to a strong support zone. So in a choppy market, there will be stocks that go up, almost certainly. KPIT is a buy. There is news in it. Within the news, the stock is suggesting another momentum upthrust. There are 3 short sells. Bharti, it's an easy short. Lower levels should be coming. IRB, which is also a short sell. Infrastructure is getting battered and bruised, not sure why. And Reliance Infra, which keeps on falling. Shorts should be taken when there is a small rally.
Okay, shorts should be taken when there's small rally. Mitesh, good morning. What are you trading in terms of individual stocks?
Yeah, so I have today, after days of all sell calls, I have today a mix of buy and sell, but I'll be slightly more nimble on the buy side given the fact that the market bias is slightly on the negative side. Ashok Leyland is a buy. It's a swing breakout trade. Buy with a stop at 128.5. Look for targets of 141. HUL is a sell. Keep a stop at 1332. Look for declines to about 1275 levels. I also have a sell on Vedanta where the indicator setup and the candlestick pattern both are turning negative. So sell with a stop at 327. Look for targets of 295. 2 stocks, buy calls with very tight stop losses. They are at their support levels. So Asian Paints is a buy. Keep a stop at 1109. Look for a bounce to 1144 levels. And CESC is a buy. Keep a stop at 968 and look for targets of 998.
Okay, well, those are a lot of the buy and the sell calls coming in. But for now, let's also cut across to the Aurobindo Pharma conference call. Remember, it was an okay set of numbers from the company. Let's listen into what they have to say.
Business clocked a growth of 9% year-on-year basis to $46 million. We have filed a total of 90 injectable ANDAs as on 31st December 2017, out of which 57 have received approval, including 2 tentative approvals, and the balance 33 are under review. Auro Health, our OTC business in the US, has started picking up with new product launches. The company, as on 31st December 2017, has filed 465 ANDAs on a cumulative basis, out of which 313 have final approval and 38 having tentative approvals, and including 11 ANDAs which are tentatively approved under PEPFAR program, and the balance 114 ANDAs are under review. The unit-wise filing and approvals are as follows. From Unit 3, 126 filed, 103 approved. From Unit 7, 160 filed, 112 approved. From Oral Life 27 filed, 17 approved. From Unit 4, 89 filed, 50 approved. From Unit 12, 20 filed, 19 approved. From Unit 6, 11 filed and approved. And Next 4 filed and 1 approved.
Actually, we are missing the context. It was an okay set of numbers. Revenues were good, margins higher, but profit slightly lower than what the street was expecting. So we'll have Ekta tell us the key takeaways from the conference call. For the moment, let's concentrate on another set of numbers. We've been telling you that it's result season and we'll have a lot of managements joining us. The first among them is Kaveri Seeds. It saw a strong set of numbers, but of course the base was low. Gross margins came under pressure, but EBITDA margins were good. Vijay Kumar, the CFO of Kaveri Seeds, joins us on the phone line. Good morning, Mr. Vijay Kumar. If you can take us through the improvement that you're seeing in the EBITDA margin, as well as the rise in EBITDA. Is it all a low base story, or you can see your EBITDA improve from the 10 crores that you posted?
You see, always Kaveri Seeds is a Kharif season driven company. Rabi is a small season for us. If you compare to last year, our top line is 4% and PAT is grown 53%. EBITDA margins, if you see last year, other income is more. This year, other income, that is not, from the investment income is very less. That is the reason it looks like there is a pressure on EBITDA. But if you see the PAT, the PAT is a 53% grown compared to last year, same quarter.
Okay. I know your mainstay comes from the cotton business, but how are we doing in some of the other seeds, hybrid rice, vegetables, maize, etc.? How has that share improved, and what could the expectation be?
Yeah, this year we did well in maize also, but exports dented a little bit because in the Bangladesh we only export maize to the Bangladesh. There's a severe crop shift happened between maize to hybrid rice, whereas we don't have a permission to sell that hybrid rice in Bangladesh. Next we are now yet to get that one. First H1 is not well, H2 is picking up. December onwards is doing well. Hopefully last quarter we will do very well.
So what can you guide in terms of revenues for the fourth quarter and for the coming year?
Fourth quarter is always a lean quarter. It will not fall under.
Okay, fair enough. Yeah, the sowing is over. But what about next year, FY19?
Yeah, for next year for Q1 we are expecting 15 to 20% growth on top line and 20% plus growth in bottom line.
Okay. And what is the realizations in the cotton business that you've seen this time?
Realizations means.
What is the operational performance? How much have you realized in terms of profits in the cotton business?
More than 30%.
Okay.
You've expanded to a lot of vegetables and non-rice and cotton varieties as well. How much do the non-cotton, non-rice contribute to your revenues?
Yeah, we are slowly increasing. Next year maybe it will be 45 to 45% less.
All right. Fine, we'll leave it at that. Also have a scratchy audio problem. Thank you very much, Mr. Vijay Kumar, for joining us.
Okay, well, Hexaware Q4 CY17 earnings were in line with expectations, with the revenues coming in above estimates, but the margins were impacted by high employee costs. R. Sri Krishna, the CEO of Hexaware Technologies, also joins us on the show now to talk about that. Sri Krishna, thanks so much for joining us. Can you tell us what the expectation is as we head into the new fiscal? Because this year seems like it's been decent for most technology companies, but in terms of the demand, the pricing pressures, etc., what are the trends that you're looking at for the new fiscal?
Well, macroeconomics around the world are very solid. America has been good for a while. Europe has caught up. America is threatening to do even better than it did. So the demand environment is quite positive. And that's reflected in our expectation for future. I mean, you did say we had a good 2017. We actually had a great 2017. We think, the best performance in the industry. 15.5% revenue growth, 23.5% PAT growth, over 20% EPS growth for the year. So we actually had a great year. And then on the back of that, we expect double-digit growth again. We've guided for a 10 to 12% revenue growth and equivalent EPS growth. So we expect our profitability to be in line with what it is for the full current year.
Shri Krishna, good morning. But just a word on the Q4 and the margin performance. That was a bit disappointing because the market was expecting 16.6%, but you delivered 15.8%. So just for Q4, what was the issue?
Well, we had guided for many quarters that we're going to have a troubled Q4, right? There are some of our clients which, were one client was insourcing, some other client, some project is going away. So in spite of all that, ultimately the guidance we gave for the full year, and we upped the guidance thrice for margin, is that we will grow EBITDA between 16.5% to 17.5%. After ESOP cost. We actually grew by 17.8%. So, the guidance we gave in Q3, we did better than that in Q4. So I'm not quite sure where the expectations came from. Okay. At a PAT level, there was a one-off on account of the U.S. tax reform. We had a little over $1 million on account of, as a one-off cost that we had to write off due to the U.S. tax reforms. But going forward, the tax reforms are positive for us. But that's at a PAT level for Q4.
Mm-hmm. You sounded very positive about the US environment generally. What is the revenue guidance you have given for calendar 18?
$10 to 12%.
Okay. Do you see an ability to bill higher, or will this all be volume?
Well, the history for 2017 is that almost 95% of our revenue growth came from volume. Actually, there was about 3% or so was a price reduction. Now, actually, we see that as a positive, right? Because there's price pressure. There has been price pressure, and in the face of that price pressure, if you didn't have a price reduction, we see that as a positive. Going forward, we're going to see two different worlds. I think there is going to be a world of legacy services where there'll continue to be a little bit price pressure, and how we manage through that is going to be key for profitability. But there are going to be some newer services where we will attract, we think we will be able to charge a premium.
Okay, and what part is legacy, what part is non-legacy or cutting edge?
Yeah, I mean, literally in each service line, there is a legacy portion, and there are new portions, right? I mean, if you look at application development, which is our largest business, I mean, if you think of mainframe development support, that will be legacy. But if you think of cloud-first development or cloud-based development or full-stack development, those will be more future-facing.
Okay. Well, just one final question from my end. What is the exact amount of deal wins that you saw in Q4, and where does that take the total deals or the total order book to?
So we announced 1 rupee per share in Q4, and that takes the total for the year to 4 rupees a share. This is apart from a buyback that we completed in Feb of 2017. For 2018, we've announced that we will return 8 rupees a share, and what the mix will be, between dividend and whether we can or should do a buyback is something that we will announce in Q1, a quarter from now. But we've said we are committed to returning 8 rupees a share in 2018.
No, I was asking about deal wins. I think you heard dividend, but that's fine. We've run out of time, but thank you for stopping by and speaking with us on CNBC TV18. That's a good quarter coming in from Hexaware, and they guided about
good
10
year
to 20.
As well.
Yeah, good year. 10 to 12% for the next year too. So the outlook is strong. But Amit Gupta of ICICI Direct is also with us to give us some F&O cues. Amit, hi, morning. If you can just take us through some of the stock ideas that you have for the trading day.
Yeah, see, actually for this monthly expiry now, what is there for the option traders, that the volatility is still higher. It is still near 21%. Generally, we get around 11-12%. I think it's an opportunity to write the options. Now, the thing is the direction that we need to pick up. Now, if you look at the call options, in Nifty also we have seen that writing happening, and in call options also that writing has just started. So the SBI or Reliance kind of Nifty heavyweights is still around 8 to 10% higher strikes. The premiums are higher because of this volatility rise, and that is why I think, because only 10-12 sessions are left for expiry, I think if somebody can start writing these call options, it gives you good money per lot. So almost 9,000, 10,000 rupees per lot we are getting if we are doing this particular trade. So for example, SBI, which is near 285, 310 and 320 call strikes, are getting written now, and still around 310 we are getting a premium of 5 or 7 rupees with the higher lot sizes. So if somebody can write this, I think they can make good money, because eventually these premiums will go off. The same is the case with Reliance, where the stock is trading near 900, and we have seen that 940, 960 call strikes are being written. So what we are recommended to our clients is we are writing 940 call strike, which is near 9 to 10 rupees, and that is where I think we are betting on that these premiums will go off, because both of these underlyings may not be able to pull back sharply towards the settlement. The reason being the long liquidation what is coming out. In SBI, we had seen from 65 million to 95 million, the open interest had risen. These were the long positions after the recapitalization. But once the yields have started started moving up, there is a clear evidence of a long liquidation there. So that is why these stocks may remain, little sluggish. The same is happening with Reliance, where almost 20% of long liquidation we have seen. It was not coming below 900 since November, but once it is, started coming below that level, I think further long liquidation may be seen. So from Nifty per se, I think these two heavyweights can keep the index, under pressure for some time, and that is why writing call options may be a wise decision in this particular.
All right, Amit. Thank you very much for giving us those sell calls, sell the call on both SBI and Reliance. Well, speaking of which, we have to move to the world of commodities and currencies. A fairly sharp dip in crude prices. Manisha Gupta is here to tell us all the highlights. Manisha, good morning.
Morning, Lata. Thank you so much for that. Well, we'd want to pick up from the macro cues, really, where you have the US dollar index trading at a 2-week highs. It has rebounded back above 90, and that in turn is one major factor that you have seen many of those commodities decline. Crude prices, yes, fell 2% overnight, and that's now taken us 4.5% down for the Brent prices for this week, and the US crude oil prices have declined 5.5% for this week now, just about holding around that $60–61 per barrel mark. So we are $5 to $6 off the kind of highs that we started this year with. It really is about the US markets, where you have seen the inventories gain, the rig count has been increasing, the US output is at a record high of 10.25 million barrels, and the report suggests that we might hit an all-time high of 10.6 million in this year and 11.18 in the next year, and that is when the US output will peak out. So until then, this is a number that the markets will really have to deal with. And it's not just crude. If you look at the metal space, that also has seen a very sharp decline overnight. You saw the copper prices decline nearly 3%. Copper actually is down nearly 8.5% now for this year. Remember, it gained 30% in last year. And that's pretty much the case across board, because when you look at aluminum prices, they are trading at a 1-month lows. You have seen the lead and zinc prices decline between 4 to 7% as well in this year until now. So this is the sector which also seems to be looking at the speculative longs actually unwinding.